We saw values rise by more than 1% in Sydney and Melbourne, up around 0.5% in Brisbane, but all other capital cities actually saw values fall. So again, we're not seeing a broad-based growth in the market. We're actually seeing some weakness in markets like Perth and Darwin, which were previously quite strong performers.
Is it quite worrying that we're seeing now this big gap between the major cities and the rest of the country?
Potentially. I think what we're really starting to see is that, as you said, there's a large gap growing, and Sydney and Melbourne are separating themselves from the rest of the pack. Of course, both cities have got more than 4 million people, so they're a lot larger than the other capital cities. Their economies are a lot more diversified than what you'd find in a market like Brisbane or Perth or Adelaide, for example. And we're not seeing the people flow out of New South Wales and Victoria into states like Queensland and Western Australia like we were before the financial crisis. So I think these are some of the reasons why we're seeing the ongoing strength there. And obviously, given that this growth period's been running for about 2.5 years now, a lot of people have a lot of equity sitting in their homes in New South Wales and Victoria.
Do you think that we're still seeing a huge number of investors driving the markets in Melbourne and in Sydney?
I definitely think that's the case. Obviously, we know that interest rates are very low, so if you're parking your money in the bank, you're not getting much of a return. And yields are certainly being compressed in Sydney and Melbourne, which suggests that it is a capital growth play at the moment. Housing finance data showed that investors are a big proportion of the market in New South Wales and Victoria, and I think it's purely a capital growth play given that those interest rates are so low, and it's very hard to find those sort of returns that you're getting in property at the moment.
Yeah, looking at your figures, you can see that the growth in the price of rent is really very soft, isn't it?
It is. It's actually the softest it's been since August 2003 over the last 12 months. So rental growth's very weak. We know particularly in markets like New South Wales, Victoria and Queensland, first home buyers aren't very active at the moment. And we're getting all this new supply, particularly of inner city units in those three capital cities. So I'd expect that it'll be an ongoing feature of the market that rental growth is very soft, particularly while we continue to get this big influx of investment grade stock in the inner city areas, giving renters more and more options to choose from when they're looking to either move or to renegotiate their lease.
Finally, Cameron, there's some interesting questions now for the Reserve Bank of Australia because you're seeing a potential softening in the Australian economy, but you've got these huge house price gains in Melbourne and Sydney. But, you know, what are the fundamentals saying?
Well, I mean, we're still seeing strong gains, and over the last 3 months, Sydney's been exceptionally strong, up 3.9%. But if we look at the combined capital city figure at 8.9%, it's definitely slowing. When we saw the market peak in terms of annual growth, it was April this year at 11.7%. And we're not growing quite as strong as we were last year. But as you said, we've now had 2.5 years of this growth, particularly centred in Sydney and Melbourne. And I guess what it shows is that at the moment, people simply aren't heeding those warnings that the Reserve Bank has said a number of times now. We know that they flagged that themselves and APRA are looking at macroprudential tools, and they flagged that that's going to be an announcement on that in December. But if anything, that might actually encourage a bigger rush of investors over the next couple of months to actually beat those tools. So it will be interesting tomorrow and over the coming months to see what language the Reserve Bank does have around the housing market, albeit that the rate of growth is slowing. It's still there, and we've had a long growth period to date over the last few years.
Cameron Kusher, thanks very much.
Thanks, Jackson.